Well, markets are rallying as oil prices continue to balloon. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all sharply higher today, shaking off the intensifying war in Ukraine. And as that conflict continues to escalate, oil prices are still surging. Now, U.S. oil prices have cooled some after hitting the highest level since May of 2011 earlier this morning, when they rose above $112 per barrel. Currently, West Texas Intermediate crude futures are up more than 3.5% at over $107 per barrel. Meantime, Brent crude prices are also up over 4% and nearing $110 a barrel. And OPEC will not be stepping in to relieve any supply issues expected from Russia. OPEC Plus met today, sticking with their original plan for a small increase in output next month. The group will raise output by 400,000 barrels per day in April. Now, that's been the pace that they've stuck with as demand bounces back following the pandemic. Such an increase, though, would not really help relieve any supply drop from Russia, and thus oil prices did continue to rise today, even after that meeting. And as oil prices remain sharply higher, other commodities are surging as well. Wheat futures trading was halted today at $10.59 per bushel after hitting limit up for the second day in a row. Corn prices are also still rising, up about 10 cents per day to over 735 cents or $7.35 per bushel. And the market is also monitoring Fed Chair Jerome Powell's testimony in the House today. Powell delivering his semi-annual monetary policy report to the House Financial Services Committee. The Fed chair said the impact of the Russia-Ukraine conflict on the U.S. economy does remain uncertain, but the first rate hike will still be implemented in March. He said the bank believes inflation will peak and then come down this year. But he also said the Fed is prepared to alter its plans if inflation persists at a higher rate than expected. Powell said that could include a larger rate hike than 0.25% at any meeting this year. He also said the bank will begin its balance sheet runoff after rate hikes have begun this year. He said they will begin to discuss the timeline of that plan at the March meeting, but he does not expect them to come up with a final plan just yet as they get into rate hikes starting this month. And although Q4 earnings season is winding down, we got a rush of new reports after the market closed on Tuesday and this morning as well. Dollar Tree shares are down after mixed Q4 results this morning. The discount chain reported earnings of $1.78 per share on revenue of $7.12 billion. Now, full-year earnings did come in at $5.80 per share on $26.3 billion in revenue. But Dollar Tree's revenue forecast was shy of expectations, sending the stock lower. The company did say it has completed its shift toward all prices being $1.25, up from the previous $1. So I guess you could call it $1.25 Tree officially now. And in other retail earnings, Nordstrom shares are surging more than 35% today after issuing strong full-year guidance. The retailer reported Q4 earnings of $1.23 per share on $4.49 billion in revenue. Now, that beat expectations on both the top and bottom line. Nordstrom Rack sales also continued to improve, down 5% compared to 2019 versus 8% in Q3. Now, Nordstrom did forecast revenue growth between 5 and 7% this fiscal year, topping analyst projections for 3.7% growth. And a couple meme stock favorites also reported earnings, starting off with AMC. Shares of the theater chain falling today despite beating Q4 expectations. AMC reported a loss of 11 cents per share on $1.17 billion in revenue. That was better than analyst expectations on both the top and bottom line. Attendance at the company's theaters also rose sharply. AMC said it had more than 59 million guests last quarter, compared to just over 8 million in Q4 of 2020. Now, meantime, SoFi stock is rallying more than 7% after a record-breaking Q4. The fintech company reported a loss of 15 cents per share at the end of 2021 on $285.6 million in revenue. That also beat analyst forecast on the top and bottom line. SoFi said it added a record high 523,000 new members last quarter. And the company's Q1 and full-year forecast also both beat expectations. And to wrap up our earnings spotlight here, let's take a look at Salesforce. The cloud software company shares are dipping today despite a stronger than expected Q4. Salesforce reported adjusted earnings of 84 cents per share on $7.33 billion in revenue. The company also projected stronger Q1 revenue than expected and hiked its full-year fiscal 2023 forecast. And finally, the economic data of the day, private job growth beating expectations in February. Payroll firm ADP reporting that U.S. private employers added 475,000 jobs last month versus expectations for 400,000. Large businesses, those with 500 or more employees, led those gains, adding 552,000, but businesses with 50 or less employees lost 96,000. Now, the leisure and hospitality sector continued to see the strongest growth, adding 170,000 jobs last month. Now, this report comes ahead of the official Labor Department jobs report on Friday morning. Economists are expecting that to show the U.S. economy as a whole added 440,000 jobs last month, with the unemployment rate dipping to 3.9%. Let me know your predictions for the jobs report in the comments. I'll see you all back here for the Wall Report tomorrow. Hit that subscribe button and the notifications bell before you go.